The market's starting to sputter a little bit around this 560 level on the SPY, down 0.84%, closing at 558.80. We saw the SPY come back down into the 50-day EMA over the last 3 trading sessions, the 50-day EMA sitting at 556.28. This most recent market rally has seen a shift in the gamma exposure data into a positive gamma exposure environment. However, on the SPY, for the last 2 trading sessions, we have seen a shift back into negative gamma exposure. Not by much, but it is evident on the structure of the overall options chain. So a little bit of a market pause here. We're seeing a divergence on the S&P 500, which is actually still in positive gamma exposure territory. We've got the Fed interest rate decision this week, and so that could be what the market is waiting for to get a little bit of clarity going forward in the weeks and months to come. We've been discussing our positioning in our option portfolios in our daily live stream, which, by the way, you can sign up for and get insights into market gamma exposure data on a real-time basis each trading session at 10:30 a.m. I'll put a link in the description below for you guys to check that out. But we've been basically discussing our overall objective of initiating new long positions, locking in gains where we can, and engaging in hedging strategies in case we see a rejection to the downside. With the options market, you can get really creative with your portfolio, and so that's what we're trying to do here with this bifurcated approach, hedging our downside exposure while giving ourselves opportunity to continue capturing profits should the market go higher.
Thanks, Anthony. A lot of our regular viewers will recall that I like to use the whole moving average as a indicator for long versus short bias. And so the VIX, once it crossed below the whole moving average, which first happened back here around April 9, that was a great short signal for volatility. And then we ended up closing back above the whole. And ever since then, even though we haven't really seen a VIX spike, the VIX has been sort of maintaining this sideways consolidation instead of going down. So we have seen a little bit of a character change with volatility. Now, we do have the big GEX cluster at 20 below. And so if we drop below the 22 mark, that may become a more likely target. We also have big positive GEX at 42.5. And actually at 30, we even have a noteworthy cluster here. So my bias is slightly long in the short term for volatility, which might imply that the markets have a little bit more of a pullback to go. And that leads me straight into IWM, which did not close below the whole on the exact same day as the VIX closed above. But today we saw a gap down a fairly good distance below the whole moving average. That's the yellow line. And so as long as we're below the whole for IWM, that creates a short bias. Now, we have room to go if we see a market rebound, which appears to be happening after hours right now. This could easily come back up to the 200 zone, 199.81. Anywhere around that 200 mark would be a retest of the whole from below. And that should be very telling if we can continue up toward the upper dealer cluster. Or what I'm starting to think is more likely is we first take a trip back down to this 190 area, which saw a lot of volume. Actually, the volume was below 190. We actually saw pretty high volume at 188. And as long as this area holds, we do have a setup for a rebound back up again. But, watch out below if we end up closing below the green box here, and especially getting below this 185 mark. There's still a lot of uncertainty out there, so we'll be watching these various signals to help us with our next moves.
Thanks, Sean. Next, I want to take a big picture look at the Qs. The Qs down 0.93% today, closing at 481.41. The 480 level has been a really big, important level that we've been watching over the last year or so, going all the way back into the May 2024 timeframe. You can see just how many times this 480 to 485 zone has served as support and resistance. We broke back above that level on this most recent rally, and we're continuing to maintain between that 480 to 485 zone. 480 is the largest gamma exposure concentration on the Qs currently, with the next largest being at the 500 strike. The Qs did close in negative gamma exposure territory. However, as long as we maintain above this 50-period EMA and we continue to see large gamma exposure at the 480 level and above, we're pretty comfortable continuing with a bullish thesis on the Qs overall. However, on the flip side, if we see one or two trading sessions that close below this 50-period EMA, which as we mentioned is right around the 475 level, a couple of closes below that, and I think we could see negative gamma exposure really increasing and volatility expansion taking back hold of the market. So we're still seeing a lot of uncertainty, as Sean was just alluding to, and I think we just want to see some support hold here on the cues for bulls to keep control here in the market.
Thanks, Anthony. Let's take a look at Tripadvisor. The ticker is TRIP, and you can see here we have positive GEX, and I have our GEX data graph pulled up just to visualize the GEX a little bit differently. We're basically in this zone right now of these three negative clusters, and with the current price at 1276, it gives us a number of different potential support areas to look at, but with the overall positive GEX bias and the largest clusters being positive, we want to take a closer look at these higher strikes, which range from basically 17 up through the 20 area. There's even some GEX at 25. Let's take a look at our GEX levels chart. And I actually have the weekly pulled up because I felt like the weekly indicators better matched the GEX picture than the daily. So you can see we're above the whole moving average at a low 62, the 13 GEX, 1250 and 12. And we have the GEX, which is just a little bit above the weekly upper Keltner channel at 20. So this is definitely an interesting target. A lot of it is concentrated on the June 20 expiration. So the way I'm viewing this, looking at our lower dealer cluster zone and where we see the GEX in the upper dealer cluster zone, is we have downside risk of 12 and the upside up to 20 or 25, which is considerable. So yeah, that's what the GEX picture looks like right now. So keep that in mind as we move ahead with TRIP.
Thanks, Sean. Next, let's take a look at one of our favorites, Nvidia, down 0.25% today, closing at 113.54. We've been hoping for a pullback below this 110 level, at least to close this recent gap from last week. It's been a very, very shallow dip in Nvidia, despite the market pulling back over the last couple of trading sessions. We continue to see large gamma exposure concentrated at the 115 and the 120 strike. In our ideal world, we would see a dip below this 110 strike, and that would give us an opportunity to go long the 115 120 call debit spread. And we'd most likely be looking to play this either in the May 30th expiration or potentially out to the June 20th expiration. If we play the June 20th expiration, we'd probably go higher than the 120 strike, maybe like the 115 to 125, give a little bit more room for a larger move in that scenario. But either way, a pullback essentially gives us an opportunity to get in at reduced prices for the next leg higher up into these larger gamma exposure concentrations. And although most of the volume today, for example, is concentrated between the 110 and the 120 strike, we are seeing sizable volume still at the 130 strike. So this is definitely a more speculative play. Nvidia is still in a larger downtrend. So this is a bit of a contrarian play, speculating for an upside breakout should bullish momentum continue in the market. And I think it could be a really big breakout for Nvidia if we were to see that scenario play out. So for us, this is a relatively low risk, high reward type of strategy, offering potentially up to 3-to-1 if we were to play one of these, for example, 115, 125 call debit spread. To be determined, but if you guys want to follow along as we trade in our portfolio in real time, you can sign up and become a member. I'll put a link down in the description below. Moving over to GLD, the gold ETF, continuing to be a parabolic beast. The move up has been breathtaking since the beginning of 2025. Today up another 2.8%, closing at 315.48. The gamma exposure picture continues to be impressive. We're seeing large gamma exposure from the 310 strike and above, really all the way up to the 330 strike. Today's candles saw a spike up to what we saw a couple of weeks ago with a spike approaching 320. If you've been following us for a while, you know that we are constantly trading around GLD. Our most recent strategy involves selling weekly puts for income against a longer dated long put position. Today, we actually locked in over $6,000 in our larger portfolio by closing out the May 9th 305 puts. And as we note down here, we are looking to continue selling additional premium by selling more of those weekly puts against our long dated long put position. GLD continues to be impressive. In my perfect world, what I'd love to see is a pullback back down towards this 300 level, maybe 300 to 305. For another re-entry on a long biased play. As I mentioned, you can see we've got large positive gamma exposure concentrations all the way up to the 330 strike. So any kind of pullback at this point would continue to look good for gold for the next leg higher. We're going to continue following the data. Currently, the gamma exposure data and the volume in the options market is all pointing higher. Market participants are still piling in at higher and higher strikes, at least in the options market. And so both from a technical standpoint and from a market positioning standpoint, GLD continues to look bullish. And guys, remember, if you want access to our gamma exposure dashboard, our algorithmic trading strategies, as well as our thriving community Discord, head on over to geeksoffinance.com. You can sign up and become a member. Members can also see all of our trades in real time as we manage our portfolio. We talk about different strategies, and the traders in our community are also sharing their own trade setups and strategies as well. It's a really great group. I highly recommend you guys to check it out. I'll put a link in the description below to both our community Discord, which is free to check out, as well as our website where you can become a member. Thanks so much, everybody, for watching, and we'll see you guys in the next video.